for today. So just kind of highlight again some common issues, considerations for the plan, talk a little bit about the process involved in transition planning, a little bit about what can make that easier, and then maybe a few tax and legal considerations to think about. And so this is one I overuse. I put it in pretty much all of my presentations, but just want to highlight you've got a beautiful moment. So how does farm transition planning always tend to start, right? It goes with the someday, that beautiful moment between dad and child, and we're talking about that someday, child, this is all going to be yours. And this is maybe where our first mistake was. We started to come up with a little bit of a plan in terms of what that future might hold, and start to build expectations in each other's mind. And so the child's thinking, oh, great, someday I'm going to have access to all this land, and I'll be out there farming, and maybe that's when I'm 25 or 30, and I'll be able to take over. Dad will move to town, but what dad actually meant was that you can have all the hay you want here. I don't want to pick up these square bales, so you can go have all the hay you want. And we've got our first little bit of miscommunication on the farm in terms of what the someday of this plan is going to look like. And so with succession planning, that's the one thing I think we're trying to avoid a little bit, is trying to encourage and make things proactive on the farm side. We're trying to shift our mindset from maybe the someday and the kind of avoiding certain topics because we're not quite sure what we want to do yet, and really trying to encourage real proactive planning pieces that the more and more I do this, you see the benefit of farms that embrace these best practices and start to do it well, that the weights and the achievement of both the family farm, both the family and the business, kind of get to where their end goal is over time. And so to me, it's always trying to shift that mindset that this is a process, and you don't have to have all the answers up front, but something we want to work through and keep building so that we kind of always stay on the same page. And so as we do that, I mean, what are some of those key things to start to think about in your plan or in your farm succession plan? And I always highlight that it maybe starts with 3 key areas that we're trying to take a good look at. And so when we're starting a plan, we're starting to look at labor. What are some of those key roles and responsibilities that are going to start to transition, and what are our expectations for that role? And compensation in this is always a big one. What does compensation look like for the next generation? Our farms are often equity rich and maybe cash poor, and so we often make some trade-offs that maybe we've got some lower compensation up front, but equity or things like that might come down the road, and we never really define what that actually looks like. And it might be all right as we're sort of figuring things out and looking at things, but as you get farther down the road, this starts to be a bit of a friction point for a lot of farms. And so it's one that gets glossed over a lot, but it is an important one that we start to address what this looks like, as well as what our expectations are for each other, for right, who's checking the cows at 3 a.m. and what are all those different pieces that commonly come up in terms of the labor side. And decision making, obviously another key one that does come up as well. And so that becomes into operations. When are we starting to make decisions in terms of buying new equipment, and what can those decisions look like? And then ultimately ownership at the end, where we're talking about specific assets and how do we transfer in and make room for 2 family farms in this. And so I was kind of curious, I don't know if we have to, if we have to, but maybe if you wanted to pop into the chat there, into the just into the chat function. Kind of curious just where you're at in your plan, if you're kind of getting started, if you're in the early stages, if you're thinking about ownership transfer at some point, or if you're stuck, or if you're kind of finished your plan and maybe you should be given the webinar, I guess, too. But just be curious if you guys wouldn't mind maybe dropping your answers in the chat there and can see what that looks like.
So far, Joel, we're getting a lot of B's and 1A and 1C.
Okay. Perfect. Then I was hoping there was somebody that would be finished and maybe they could tag in and kind of start to offer some suggestions too. But okay, that's good to know. A and B, and so it helps me just kind of think about where we want to go in this presentation as we move forward too. So just wanted to kind of talk a little bit about what makes transition planning so difficult, right? I think there's a number of things that come up for our farm families, and it can be all over the map that holds it up. That in a lot of cases, right, farmers, we love what we do, we love being involved, and so you deal with a lot of things around identity and things like that as we kind of close out or move forward in our transition plans. What's my future role if we're transitioning out? A lot of times it's financial. So what are the financial implications going to be if we're trying to bring a second family into this operation? How can we plan that out and actually make that work for both generations? A lot of times it's the business depends on me. So, right, maybe we don't like some of the crazy ideas that the next generation has coming in. And in a lot of cases, right, our farmers, and especially up north, right, we've carved out a lot of businesses that there's still a lot of, first generation farms that kind of built it from scratch and really built up their operation. And it's difficult to start to transition out into different hands. And sometimes that, when we've really taken on that skill set to take on a role and we maybe haven't passed some of that skill down to the next generation, there can be some friction points there if in terms of not seeing things done exactly the way that we did them. Sometimes it's we want to control the business and keep control on it, but in a lot of cases it's and in some cases it's avoiding conflict and things like that as well, that we're just not certain what we want to do. But I think one of those main reasons is just there's a lot to consider in these plans. So you're trying to think through a lot of different issues. And so sometimes we get stuck not knowing what to do. And so really, again, trying to encourage that it is a bit of a process and step by step and kind of eating the elephant one bite at a time helps get you to where you want to go. And so in many cases too, there can be significant risks to this as you start to move forward. You can Google all the stats on family businesses in general that succeed and transition to the next generation. And for those that maybe had an opportunity to attend a webinar earlier this week with Tom Deans, I think he gave the stats on it in terms of how many family businesses transition. And right, it can be difficult because there are a lot of risks. That sometimes we've got things like unexpressed expectations or unexpressed frustrations with family members that make it difficult to make it even further. We've got differences in terms of where we want to go with the business in the long run. We maybe don't have a clear plan in terms of, for the senior generation, what retirement planning could look like, or what it looks like for them to maintain income, or to get that next generation started and in. And so a lot of it deals around the lack of clarity for all generations and maybe some differences in expectations, discussions, and things like that. And so the only way through it is to start to really build out a process that's going to enable you to kind of cover some of those pieces. And we'll talk about that. But just quickly, I think some of those things to start thinking about that maybe help with some of that is to really think through, is the goal to transfer the farm to the next generation? And so that might seem redundant. Why would you come to a transition planning thing if that's maybe not our goal? But in the odd case, I do run into a farm that's maybe not their goal, that they either aren't trusting that it can continue on, or else the farm maybe would struggle to make room for two generations. And one of those key things that's over on the other side is what mom and dad's retirement looks like, and can they kind of get out of the business while being able to take maybe a bit of a pension, quote unquote, a pension, to enable them to do that. In many cases, we haven't told our successors that that it's okay for them to be involved yet. We sort of expected in our own minds as the senior generation too, and we haven't told them there's room for them in the business, that they can come back in and help them understand that clear path to entry. We haven't maybe thought through a strategic plan. And there's some other big issues, right? The biggest one, and what a lot of succession planning boils down to too, is that fair versus equal conversation. So how do we start to sketch out what can be in place for multiple farm children, or the farming child versus the non-farming child? Again, with our operations usually having lots of equity and growing, but maybe not always having the cash flow to create good income for all family members. So it's a lot to think through and plan through. And so that's some of the big issues that commonly come up on my end when we're starting to talk with families. And there are a few things that we can do to address that, but really taking a good look at the information and building out the pieces of your plan that until we put numbers to things and have discussions on direction, it gets to be a little bit difficult in terms of finding that silver bullet in terms of how to transfer. And because it does take time, so it is something that, one of the most common questions you get is how long should a transition plan take? And it can be all over the map, and it's different for every family that it can go from 2 months to 20 years. So really depends on where the junior generation is at in their skill set, ability, age, and kind of desire to step in, and the senior generation in terms of their ability to kind of retire out of the business or move to more of a coaching role and have those two families working side by side. And so this is the one that I always start to sketch out a little bit of a timeline. What does our timeline look like? Where do we want to be in the next 5 years, in the next 10 years, in 20 years? And so the benefit of starting transition plans early is that the earlier you start, the more options you create for yourself. If we're dealing with a 2-month plan and somebody wants out in 2 months, then that leaves us with fewer and fewer options to start to think about how we can transition this. And the longer you start and the more you stay in contact, kind of maintains some peace in the family, and then also increases those options available to you over time. And the other reason to kind of build a good process and start to talk about it is that you always bring it up that there's no greater lessons in Star Wars. And I think on Christmas we watched the first movie again. And so I was starting to think, right, you want your little Padawan that's coming along behind you to make sure they're going towards the light side here, rather than going to the dark side, right? So that we've got all kinds of things that if we start to go down that wrong path, that right, where we haven't set out what those expectations are of everybody, we kind of always living in a little bit of uncertainty about what might happen in the future, that you start to become afraid of that, and fear leads to anger, and anger leads to hate, and then hate leads to suffering if you go down the dark path, right? And then all you're left with is you got to kill off the master if you're in the Sith side to ever become the master. So that's not what we want to do. Obviously, we want to try to get our little Padawan going to the light side here, so that we're building out a good plan of what their future looks like, and you use the Force to kind of get your farm where you want to go. And really, it's those things, those misunderstandings that start to send us down that path. And the more and more I've worked with families, the more I used to think you could shortcut some of those things, and and kind of put in structures and things like that would just enable us to do that. But really, it does circle back to that progress. And so sometimes it's easier said than done to actually put these in place that the next generation, they're ready to go and they're ready to get in. And sometimes understanding that these are stressful decisions and do take time to make helps you make that progress. I see all the time that we want all the information and all the answers before we start as farmers, right? You're used to analyzing everything to either produce the best animal or the best crop that you can. And it really does come down to, building good progress on plans versus always getting that perfect plan set in stone. You want to really focus on certainty so that everybody's certain about what happens. Otherwise, what you see a lot is that people kind of live in their own minds and they go off with their own understanding about what happens, or why didn't this happen, or I expected this to happen, versus a pure agreement situation. That's always hard to get perfect agreement on what's going to happen, but you want to build certainty for both generations, and then clarity as well. So that's where we start to bring in other tools and things like that. And depending on how far apart we are on things, that might shape what tools we need to bring in to help us reach that certainty and clarity. And I always encourage, except in my own family, trying to be inclusive and things like that, you're trying to be as inclusive as you can in these discussions, that you're not leaving people kind of in the dark, and that there's a kind of a shared path to the future ownership of the business. And so this is my other one, that when we start to talk about, how do we actually start to put those things in place, that how would we break that up to start having these discussions and start considering, and I use this in most of my presentations too, but borrowed it from my good friend Merle, that how do you start to take a good look at what the farm operation is, and what are some of the different pieces of the puzzle that we need to solve. And so for me, when we're coming back into the farm, the first thing I like to look at is a bit of what the operating business is here. So we've got our farming business, might have our operating assets, our cattle, our equipment, our inventory, operating debts, and things like that. And if you're the next generation coming into this operation, I think this is where you kind of want to be, your first thoughts, and also if you're the senior generation, what your role in this operating piece looks like as well. And so that becomes all those pieces in terms of labor and decision making, in terms of decisions. But then maybe this is the first piece of ownership that we want to start talking about as well, that how do we actually get them involved in the business, making decisions, buying equipment and things like that, so that maybe mom and dad aren't always carrying the business. If you're the farming child and you're coming back into this business, maybe this is the one that I wouldn't want my non-farm siblings to be part of, that you've got, you're kind of free and clear to chart your path with the business, and understand the numbers and where you would take the business in the future. And start to really keep a control on that, so that you're not maybe running decisions past somebody that lives in the city, and they maybe don't have as big a clue that or in terms of what you're trying to accomplish. And then there's the other piece, right? Our personal wealth side. And so this is what makes farm succession even trickier than maybe succession of other businesses. That a lot of our wealth and things like that is tied up into our land, and how we actually use our business is tied up into the land piece. And farms, the other side that we do need to look at is the off-farm assets as well. And so these things certainly help, right? As farmers, we're always investing and putting things back into land and trying to see what we can do with increasing our assets. But as we prepare for a transition, some of these pieces here can help as well, in terms of insurance or off-farm investments, or if you happen to buy Bitcoin in the last couple months here, that definitely would have helped in my case. But some things like that can really make a bit of a difference. And then if you're that next generation, what do you really need in terms of the land side? Is there access to land that maybe if you have ownership here, you're starting to think a little bit more about, well, if parents are really concerned about keeping the next generation, or keeping things kind of fair and equal between other siblings, are there things like land that could go there, and I've got maybe an ability to rent that over time rather than necessarily own it, if I know that I'm on a path to own the business someday. And obviously there's give and take with all of that, but I like to look at these three pieces and start to build a strategy maybe for each one of them individually, is what I find really helps farms start to break it out and think about, okay, we've got these three pieces in our business of farming, and maybe we can come up with some different strategies for each of these. And so what might that look like? I think when you're in that business conversation, really starting to think about, where the business has been in the past and where we're at today. So in terms of what cash flow is like, what profitability is like, what markets are we in, and where can we take this in the future. And so it's thinking through all those kind of strategic plans about, what makes being in business together great. There are different things that we would want to do as we bring in somebody into the business. Are there things that we could change, that we can make better, that we can work on together? And then are we actually committed to starting to do those things that makes room for two families kind of in the business, and maybe one retiring out over time, and one that can kind of continue things forward. And so it's really building that strategic plan and business plan to start with, and maybe focusing on that business piece first, and then again, being inclusive with your decisions around that. And then while you're in that business this one's one I always get a bit of pushback on when we're chatting, but just starting to think about who would all be involved in that business circle. If you do have multiple siblings that are coming back to the farm, if you have parents and next generation, do we want to be tied into one business together? Would we pool our marketing and our production efforts? How would we share profits and shares and wages if you're in a company? Those pieces, or would we be more comfortable separating businesses and maybe separating our production and marketing a little bit, maybe sharing some ownership, or maybe it's a joint venture or something like that enables us to work together. And so this one's really family dependent. It depends on every family a little bit in terms of operationally what's going to work for them, but it's one of those things in that business circle to start thinking about where we're going to go, scale up, scale down. Sometimes there's different risk tolerances between multiple siblings coming back into that business, but really looking at it in terms of what some concerns might be if we go into business long term. What might some of our considerations be, and then how concerned are we about that in terms of multiple or separate businesses that we come in, or maybe different enterprise streams if somebody wants to start something in addition to the current farm. And so they're just things to think through, and then again you can kind of find the structures that are going to work for you as you start to bring it into your farm operation. And certainly compensation's a big one, and it does depend a lot on ages, I find too, right? That if we're starting early, maybe parents aren't as comfortable bringing someone directly into the business at 20, and if it's a company or something like that, and maybe that child starts something on their own in the short term, maybe they've got something that they do on the side and they start their own business, and then as they get older, you start to merge the two businesses together, things like that. So there's lots of different conversations that can take place there, and it's again just good things to think through as you plan kind of long term for your farm business. And again, monitoring, I might skip over this one a little bit, but how would you start to have that conversation is really taking a look at the financial picture of the business, I think, and start to take a look at where do the dollars go in terms of our gross revenue, and what comes back, and what are kind of the living costs to make room for two families in this business. And so do we have living costs? Do we have some risk margin in there that can make it work? And if somebody's coming in, I think there's a few studies out there, right, that having a successor and the value of having a successor can increase kind of overall productivity and net worth back to farms. And so this is one I sometimes pitch to the next generation, that what is their business plan when they come back in? Do they have a bit of a proposal for what they could do to maybe add and enhance more value to the operation as well? Because it doesn't take tons, and so sometimes I'll use that chart, but if you can, not that you have to go through all these numbers, but if you can increase productivity, or your earnings before interest, tax, depreciation in this case, even by marginal amounts, you can start to make significant wins in terms of cash flow that might be available to both generations and making room, or right, in a lot of cases, if we have two families involved, you see maybe some additional pieces, whatever it might be, some additional things that kind of increase value and returns back to the farm operation. And so doesn't take tons, and you can start to make significant differences in terms of cash flow that might be available to that farm with a real good business plan and cost approach to doing that.
Joel, before you move on, we do just have a quick clarification question in the chat on what does EBITDA stand for again?
Yeah, for sure. So yeah, good question. And it's just your earnings before interest, tax, depreciation. And so it's again, I kind of put this, I debated putting this slide in here. It's maybe a little bit not the lightest slide in the world, but yeah, it's just one way to maybe look at your business. So what are the earnings that are coming into the business before you would have interest, tax, depreciation, and taken off as you file for tax. And so it's just one way to really look at the profitability of the business. And what I did here was just kind of show what happens if you've got an income statement and you broke it down by $1. So you've got your income statement here, and you're maybe benchmarking and kind of keeping track of what some of the different farm costs might be. And then you can kind of look at, okay, so if we're earning this much, what would a 5% change to our overall profitability do if we start to really look at, are there costs we can control? Are there things that we can improve? And maybe try to achieve a 5% increase is a strong goal that I see some people set and try to increase value back to that farm operation. And so just kind of laid it out here. What happens if you change up and make even some marginal increases in terms of profitability? A real focus on that. I've seen farms really make the difference for themselves by really kind of planning that out and showing that there is room for two families to come back into the farm.
Awesome. Thanks a lot.
Yeah, thank you. Good question. And sorry, that was a little complex. So I know I kind of debated whether I'd drop it in, but again, something that I think is one of those good practices. And there's a lot of different things in here. So by all means, not saying that you have to do all of them. You have to get together and do all of them, but it's a lot of those good pieces that you might be doing on your own, and then kind of taking a little bit of a lens at it from what would this mean to us in the long term if we're starting to implement a transition. And this is the other piece that ties into it a little bit, that as you're starting to sketch it out and starting to plan, starting to think about where you could go with things, really like to look at what that retirement plan might be for the farm family, especially the senior generation. And so for me, when I work with families, this is probably number one that I like to just sort of have we had some thoughts around what this looks like, that mom and dad in these cases, that they've got what they need to be able to retire and maintain some control in their life of what they want out of the business. And so when we have these conversations, I always encourage working with a financial planner that can help a little bit as well, but try to help you think about, where does this income come from? Are we going to be staying involved in the business over time, right? Is that our plan, that we would, if we're in a company or if we're in a partnership or a proprietorship, are we planning that maybe we're going to maintain income from a portion of the cattle herd or from the grain operation over time, that we're going to be keeping that, and that's our plan, that for the next 20 years we expect some kind of return on it. Is it rental income, that we're going to rent some land and maybe we would transfer the land through a will, but we want for the short term to take rental income? Are we going to redeem equity or value and maybe think about whether we would sell shares or land or things down to that next generation, and starting to think about, what makes sense for our farm and our family and our operation, what mix of this, or do you have kind of off-farm savings and investments, right? I mean, and for farms, right, we've generally invested back in the operation, but have we really thought through this in terms of maybe there are some savings or investment plans, or right, insurance does come up as well, that as part of that we could put into place that might make things easier in the long run, but it always has to make sense for you, kind of the family and the operation. And then you really just kind of want to build in some expectation and understanding of what that would look like in the long run. And it's way easier said than done. Like I totally get it. It's way easier said than done when you do that. But it really is about setting up good governance for a plan, so it doesn't have to be uncomfortable, that you can start to chunk out those different pieces. So then you're kind of armed with the decisions you need to make. And Right? I know I always get the eye roll a little bit when you try to, when you're trying to encourage, meeting, like these don't have to be done in one standpoint, that you kind of want to pick up a plan and start to write and sketch out some of these ideas, and then set up a bit of a schedule for yourself for how you're going to meet and discuss and talk about each of these pieces. And so, right, maybe this is a little bit of an extreme example of all the people that are involved, but yeah, good farm governance is one of those best practices, and especially around the transition plan, that the more and more I've done this, the more you see the families that really pick it up and run with it. It can be uncomfortable at first, but if you can start to put, regular meetings to discuss a transition plan and what are the pieces that come into it, you just help keep everybody on the same page. And you write down what some of the decisions to that point might be, so that it's not the same conversation next week that we meet a month later and we're having the exact same conversation because we didn't write anything down to where we're at, or we didn't talk about some next steps that we could do to help us make our future decisions. And so the families that I see really put this into practice, makes a world of difference for them. It can be a little bit of a pain up front, but you're trying to do those proactive things that rather than kind of leaving everybody in the dark as we go through a plan. So to me, it's something I've seen. It seems to be a best practice that can really help you just make progress, and setting up regular meetings to start to discuss each of those pieces and how it would affect your farm. And so that's what I try to encourage a lot of in my conversations with farm families through FCC. And then the real benefit is, once you've got these pieces that, like I said, as farms, we're always looking for a silver bullet, that it's got to be just an easy way to make it happen. But if you've got all that pre-information pulled together for yourself, you can kind of start to make some decisions on what tools are out there that could be implemented to help your transition. And so this would be working with your experts, your lawyers, your accountants, to help you do that. But you can then start to say, okay, we've made a lot of our decisions of how we'd like things to happen. In a perfect world, what are the tools we can start to put in place that are going to make it as easy for us to do that as a family and a business as possible? And so rolling through a proprietorship or a partnership, or could we look at forming a corporation? And are there some things that we could do there if we're planning to grow or expand? Or there's some things in the company we could do to take advantage of some lower tax dollars, or are we at a place where we'd want to put in multiple corporations, separate land? And so the better the information you have up front, that you can help your advisors understand the decisions you want to make, the better they can kind of help you choose which of these structures are going to enable you to do that. And so this is from last year, but obviously a lot of it can be tax driven as well. And so as you're starting to think through that, I've got kind of target tax rate here. That was more of a conversation around. I might be running short on my time to leave for questions, but that would be more kind of when it might make sense to start to look at, are there some corporate things that we could look at rather than maybe being in a partnership or a proprietorship, that once you start to get past these rates, that then maybe it's a time to start looking as a farm, are there benefits to being in the farm company and things like that. But it depends on the conversation for everybody a little bit in terms of operations and tax. And so those are the two things you're kind of balancing a little bit when you're starting to choose a structure or a plan that might work for your farm family to either transition wealth or bring in owners, or how you'd want to structure that. And the other two tax things I did want to touch on is, is just quickly to work with your accountants a little bit. And as farmers, we do have some special rules out there that can help enable us to transition a farm. Kind of the two key ones that a lot of our tax planning can involve or can consider is the capital gains deduction. And so I've got a bit of a simplified definition here. It's something that definitely you'd want to see if you qualify for it, and work with your professionals to make sure it works. But generally, if you're transitioning land, you can qualify it from great-grandfather to great-grandchild. And if any person in that chain has met they usually can qualify, and that's that $1 million exemption on farm property. So if you're selling shares of a farm company that are qualified and have met kind of the tests, or if you're selling farmland or transitioning farmland to the next generation, there's a whole lot of different planning things we could start to look at in terms of making sure we get some real benefit out of these out of this capital gains deduction. And the other one is the farm rollover provision. So this is kind of the other unique one that just to keep in mind for your planning as well, that parents can roll and transfer property at its tax cost to the children during their lifetime or upon death. So if you've purchased some land and you're starting to think about maybe we want to transfer that during our lifetime or on death, farms have this special farm rollover rule that enable us to keep kind of land and wealth in the family. That again, if you're in that linear chain from grandparent to grandchild, land can be rolled down at whatever the tax cost it was originally purchased for. So to get to that cost, there's a few different ways, but you generally would look at the cost that it was purchased for relative, and it can be transferred or rolled down to the next generation without incurring significant, or without incurring kind of tax costs at that point. And you can use the two rules together to help make some sense of that, but it is one that you really want to take into account in your planning in terms of if it's your goal to transfer land at its tax cost, or if you would like to do, in a lot of cases, right, a mortgage back or things like that, and we want to use the two rules together to maybe take a portion of some proceeds back. You can do that as well. If you sell it for maybe a little bit above what you paid for it, you take some income back, you can roll a large portion of that to the next generation too. And generally then they can also then use a farm deduction or a capital gains exemption deduction at some point in the future as well. And the other big one I do want to kind of touch on as well is just kind of as you're starting to talk with your accountants and your professionals, right? The will is obviously a big one as well. And so again, if we had an event earlier this week where Tom Deans was on, and he talked a little bit about just the staggering numbers of in Canada, not just in agriculture but across Canada, what how little will planning we actually have in place. And so this is that one that wills are one of that best practices. If we can get those in place, we can really start to address what are some of the concerns that we want to put in place, that are there things that we can do to address this. So divorce, disposition, death, dementia, we want to address those in our plan, and we can kind of continually implement a will and update a will over time to make sure that at least we've got, as we're developing our plan, we've got kind of a backup plan. So we've got a will in place that can trigger if we're not sure, but you'd want to kind of take a good look through these 5 Ds of your plan. What some of the different implications would be in your plan. Would that change some of your planning procedures over time? And then can you put a will in that's going to help protect you from these certain pieces, or at least as you're developing your transition plan, create a bit of a backup or a what if sort of thing. And so this is a big one to make sure that we're starting to encourage more proactive planning on that will piece. And then you're ready to bring on your experts. So if you've kind of thought through some of those things, you really want to bring on and work with a good group of experts that can help you make the right choices for you. And so this is the one too. We're always looking for an easy answer in terms of what can we put in place, but making sure we're relying on our accountants to advise us on the tax issues and the planning issues, our financial lenders that can support our operation, as we're maybe making room for 2 families, lawyers to assist us in that will or shareholders agreements, and then depending if you're stuck and things like that, mediators or farm succession planners and financial advisors. And so there's a ton of advice out there, but and you always get a lot of pushback on it. I'd like someone just to tell me specifically what we need to do, but there's a lot of advice out there, and making sure you're getting good representation kind of across the board, and then really making your decisions with it. So there's lots of advice, but at the end of the day, it's your plan, and it kind of has to make sense for the farm the family and the operation as you go forward. And always kind of put in here, just beware of the path of least resistance a little bit, that a lot of times that we will either want to do nothing or not make decisions on it, so we kind of avoid the topic and push it off, or else we just go with whatever we don't want to raise an issue about, and sometimes that can be to our detriment in the long run. So you really kind of want to make sure that you're not taking and not kind of defaulting to that piece of last resistance. And so again, just want to kind of jump down to questions a little bit, but some things that a bunch of things in there that just consider it and incorporate into maybe your planning processes. But keep looking out there for places to enhance your knowledge and think about what you want to do, build a shared vision, identify retirement operating needs, think about a timeline, and really starting to build a regular governance plan for how you're going to kind of solve all these issues, and then identify who's on your advisory team and help that next generation maybe look at their business plan so they can come into this operation as well. And the last one, I always kind of encourage you to document and write some things down too, so that you keep making progress, and it's not, well, we talked about that last month and it didn't go well, or we kind of forget what we covered. And so those are some key pieces of why a plan can be so important. I'll maybe jump through this just to go, but as well, if you're looking for some more just knowledge resources at Farm Credit Canada, we've kind of been building out and expanding on the fcc.ca website. If you go to the knowledge section, we have a transition tab with a lot of our resources. We have a number of videos up there as well, and my colleague in Saskatchewan did a whole bunch of videos last year as well, and kind of got them posted, and she's got some great pieces on that planning. Farm Management Canada has just released a transition guide as well, so they've been kind of assembling resources from different provinces and things like that, and they've established and built kind of a transition guide. And I think the web link is transitionguide.ca, but if you go to their website, you can find it as well. Obviously, tons of articles that are out there, Country Guide, Western Producer, but it really is kind of taking a good look at what you've seen from common examples and then starting to apply back to your own family. I'll maybe jump past that one, but as well, my email is at the bottom. So if you're thinking about it, please feel free to email me, or certainly get in touch with your local FCC office as well. And with that, I'll maybe close that down, and happy to take any questions that might have popped up there.
I do see we have one question about those 5 Ds on the will slide. I think they missed them. We're wondering what they were.
Okay. Yeah, and so yeah, appreciate that. So debt, and now I'm on the spot, but debt, divorce, disposition, if you're expecting something might be sold in the future, dementia, did I get to 5? And it's really just some 4 key pieces. Okay. And yeah, and so it's something that really it's just about kind of the concept there is, those are some of the fears that are out there. So there are things that we really want to just take a good look at and put into place a bit of a plan around. Have we discussed this as a family? A bit of the what ifs. What if something doesn't go to plan? So what if there is a divorce, or what if we have a disposition of something that we have to sell, or what if somebody does get dementia? And part of our plan was that mom and dad were going to hold on to everything, and or they haven't put a good structure in place that that puts a lot of risk back to the farm operation. And so that's really what it was about, was trying to, what are those 5 things that we can do that can throw our plans a little bit off course if things don't go exactly the way we want to. Are there shareholders agreements to put in place? Do we have a good will set? Do we have powers of attorney in place if if dementia or things like that start becoming an issue? And right, and so it's really just taking a step. And I think the last one was disability. That it is something that in my world comes up quite a bit as well, as disability. That if somebody becomes disabled or things like that, are there tools we can put in place when the plan changes maybe? So that was kind of my intent with that one. Okay.
Awesome.
We just had a question come in on the chat here, Joel, looking for some tips on switching from a high-paying off-farm job to joining the farming operation full-time when farm cash flow is tight. Do you have any insight there or any tips or tricks there?
Yeah, and my answer would probably be a little general, right? I mean, I guess it's right, and it's something that right, it happens a ton in ag, right, where we've to facilitate our entry back to the farm, we maybe worked right, we worked off farm quite a bit, depending on like whatever the role was, right? And congrats to you for high paying off farm job, I guess too. That it's one of those things that, yeah, it is a reality of starting to think through what were our practices in terms of spending. Like, are we going to be changing those and recognizing that there is going to be a difference in cash flow to us, and so a lot of it is personal finance things that you maybe be getting into there, and so having a great high paying off farm job is good. It depends if you are kind of matching with high paying off farm and high spending, I guess it depends, and then transitioning back into the farm. That I do see that a lot as well, that the reality of the farm is sometimes it can't afford those same wages, and then if in this case I'd maybe just I'll maybe just speculate a little bit from each side, but let's say in this case you're the parent and maybe you're worried about a child that's coming back in from or your junior partner that's coming back in from a high paying job. I think being real clear in terms of what compensation looks like, that compensation might not be to the same level in terms of what you can pull out of the farm, but then you do want to be clear in terms of what might change hands in terms of equity, right? That farming is an equity business, and you're building equity rather than necessarily having significant cash on hand at any given time. So if you're able to do that, what I see a lot of is families coming up with a bit of an arrangement in terms of, all right, we know cash compensation might not be as high, but there's right, farm trucks and things in the company. On the equity side, right, this is maybe how you're going to be building equity over the long term. And I've seen farms come up with different formulas for what that looks like on the land side, that someday it's going to transfer. And if you're in this scenario, the next generation coming back into the farm, transitioning from high paying, right? I mean, it's kind of it's one of those, the hardest one I see is initially is the personal choice to leave a position that's high paying and join the farm. There's some risk to that, but a lot of independence, and you kind of want to be clear on your role and maybe habits and practices you're going to change that enable you to reinvest in your operation, grow the operation, and maybe not necessarily put the same expectations of land back or of income back to your farm family. And so there's lots of different considerations. A lot is personal finance, and a lot is, can we come up with arrangements that, all right, we know cash flow is going to be slower, but do we maybe have a plan in place for what ownership would look like rather than compensation at the beginning? And so that's kind of your conundrum, and kind of making sure that those two pieces are in place, and you want to have that discussion around those two concepts.
Joel, I'm going to jump in there too. So my name's Weitz. I'm one of the farm credit managers out of Grand Prairie. So I would just say that one thing to keep in mind would be sit down with your lender and say, like, what are we actually clearing net? And then what is this added expense going to be? Because while your off-farm job is awesome, you're probably doing your off-farm job and helping the farm. So the amount of off-farm income that you need. So if you need, if you're making 120,000 a year in the oil patch and now you're going down to 60 on the farm, that 60,000 needs to get covered somewhere, and it can be a big deal. So that's the first step I do. Some of the watchouts I've seen too is that when you come home and you don't have that money, then it suddenly becomes tight, and that becomes a real hassle too. So, but that was a great question. Any others, feel free to fire them out.
The hard ones go to Weitz.
I'm shorter in my answer though. That's good.
Yes, yeah.
Yeah, we'll just give everybody a few more moments here.
I guess the question for the participants might be, there's 16 people on there. What's the biggest thing holding you back from working on your succession planning?
That's a good one.
Yeah, good question.
I imagine people are typing feverishly, so I'll wait for that. The other thing I would just say on that farm income thing would be, if you're thinking about, you've bought some land and you're buying some land off your parents, for example, and you're thinking about going from off farm and going farming full time, then talk to a lender about that too, just to see what that's like. So.
Mm-hmm.
Oh,
There's
communication.
One that says communication, yeah.
Yeah, and that's always the elephant in the room, right? Is communication, is how do we, right? And really, I think and really, right, it goes back to those things that, the more and more we put it on hold, the more and more things build up in everybody's mind. And so you want to try to, as best you can, give some grace in these plans, that if you're the junior generation, recognize these are really stressful decisions on people and family to try to make. They're a lot of times looking for the right answer for themselves. But right, in the junior generation coming in, I think there's nothing worse than maybe not knowing where you're going to end up at the end of the day. That right, I think planning's changed quite a bit over the last number of years. That right, the old plan was we just threw the will and it would transfer. Right, but I can't tell you the number of farms I've met with where maybe we waited too long to have some of these conversations, and it does get worse and worse as you build them up. And so, yeah, communication's a big one, and you're trying to get clarity and setting expectations for everybody involved as best you can. And there's lots of different things around that communication work for sure.
One piece of advice I'd give is see if you can get a third party in there. I think I've been lending for a long time, and I think the lenders don't mind starting some of that conversation, right? Because the kids can sometimes feel like I'm working for free and I got no certainty. And the parents are thinking, I don't know if these guys are going to be as committed to the farm or make the sacrifice that I'm going to make. And you end up in this, it just gets more and more bitter over time. Right now, it's like 5 years I put in, okay, now it's 10 years, and my friends that have been working off farm, they've got something to show for it. I kind of have, I don't know, a sort of commitment from my mom and dad, and it can end up, I've seen it so many times, just like Joel says, that it causes friction. So bring in your trusted lender, your sidekick that sits down on a coffee and kind of tries to translate what one side's trying to say to the other side.
Yeah, really good point.
Awesome. Unless we get a last minute question in there, I think it's almost 10 after 1 now, so people's lunch breaks are over, so we'll probably call it a session. Yeah,
and I just maybe say thank you guys for having us on. I really appreciate it. And yeah, by all means, like Weitza said, yeah, certainly reach out to your local FCC office if it's something you're interested in too. And yeah, really appreciate the opportunity to be here with you guys today. So thank you.
All right. Bye, everyone.
Thanks for coming on, everybody.